Hello and welcome to BQ Prime. I'm Hiral Daria. Joining us on the show today is Avinash Gorakshakar to discuss the movers and shakers in trade today. Good morning and welcome to the show, Avinash.
Yeah, good morning, Viral.
Avinash, let's first pick up Amber Enterprises. If you see in terms of Amber, a good set of numbers, the revenues have jumped around 55%. There has been an improvement in the return ratios as well. What would you advise an investor to do? Someone who's an existing investor, whereas someone who is looking to enter the stock as well.
Yeah, I think Viral, Amber reported a very strong set of numbers. Not only in their traditional room air conditioner business, but even in the mobility as well as in the electronics and the other kind of segments where they operate. I think what clearly has emerged from this performance is that the company is pretty confident that in the room air conditioning segment, it will be consolidating its market share. In the mobility and the electronic segments, it's added a few companies in their product portfolio. So I think you could see better numbers for FY24, largely aided by both volume as well as by margin expansion. I think for existing investors here, the best thing would be to retain their stocks at least for the next 12 to 18 months, because I believe that the refrigeration business is going to gather further momentum in the current year, and mobility and electronics business is also taking a pretty good shape. So I think all in all, it's a good kind of medium-term kind of play. We could expect a decent risk reward of at least 15-20% over the next 12 to 15 months. For new investors, I would believe it's better to wait for a kind of a moderate kind of market decline, wherein you can accumulate this stock for a longer-term perspective. At the current valuations, the stock does not appear cheap, but yes, growth prospects appear to be quite promising.
Right, so that's with regards to Amber Enterprises. In fact, the stock is seeing smart gains as well in double digit in today's session. Similarly, you have a CreditAccess Grameen also that has reported numbers. Firstly, Avinash, what do you make of the numbers?
No, I think very strong numbers again here in the microfinance space, where the company is a pure play on the microfinance market segment. The company has recorded a very strong growth in profit in the fourth quarter, almost 86% increase of amounting to 297 crores. Asset quality has also come down quite significantly, so that's a good point. And more importantly, the company is pretty confident that disbursals and loan book growth would be pretty impressive. Plus, they have started entering new geographical markets, which actually reduces the geographical risk for the company. My sense is that the stock would see a further re-rating, considering the fact that post-COVID now normalcy has come in and microfinance markets are doing pretty well. In fact, the NIMs are almost close to about 12%, and the market and the management commentary post the results was quite strong. They expect the margins to be around 12.5% on the NIM front. So I think all said and done, any decline would definitely be a good opportunity to accumulate the stock. And I think even at these levels, one could see a reasonable amount of re-rating, because microfinance is a very profitable business. And considering the geographical reach which CreditAccess Grameen enjoys, I think the stock is likely to be re-rated. So definitely a buy on decline. And even at the current levels, one could expect a steady upside going forward.
That's the CreditAccess Grameen. Staying with the financial names, you have a LIC Housing Finance. That's an interesting one to look out for, because clearly the stock is one of the top losers, seeing cuts of almost 5 to 6% in trade today. However, from an earnings perspective, if you see a 5.5% increase in terms of profitability, the NII has improved as well. What do you make of a LIC Housing Finance, and what is the pressure point that's keeping the stock under pressure today?
So I think numbers which came out yesterday, Hiral, was slightly disappointing. You rightly mentioned that profit growth of 5.5% was not something the markets were excited about. And I think markets were definitely expecting some better numbers, considering the fact that it's the third largest housing finance company, has a very strong parentage from LIC. So I think unless you get to see a stronger kind of profit growth, a stronger kind of net interest margin, my sense is that it would continue to be a little underperformer in the market compared to other players like a Canfin Homes, which has done significantly better. So my sense is that in the very near term, markets should obviously wait for a better commentary from the management, a better kind of a solid number, especially on the net interest margin front, on the disbursal front. So I think going forward, numbers have to improve. Otherwise, the stock is going to remain a market performer at best. So I think existing investors can hold on, because I was just seeing the yearly numbers. The yearly numbers appear impressive, but the fourth quarter numbers were below expectation. So I think it's better to wait before you make a fresh investment here, at least for the next 1 or 2 quarters. Only once visibility is strong, then I think the stock could get re-rated from the current levels.
Right. Moving on, staying with the financial space, you have a Bank of Baroda which has reported numbers. Brokerages also seem to have given it a thumbs up as well. Now, if you see from a stock price performance up around 80 to 82% in the last 1 year, however, on a YTD basis, it's pretty muted, right? Can the outperformance continue? One, from a stock price performance, and two, is it a good level to enter, taking the valuations as well as the performance into consideration?
No, I think my sense is that the coming year, that is FY24, is going to be another strong year. With the credit growth in double digits, I think there's a lot of opportunity and scope for Bank of Baroda to increase its balance sheet. Most importantly, the profitability this year has almost doubled to 14,000 odd crores. Asset quality has also come down quite significantly. And I think both corporate capex as well as retail demand is very strong. Plus, fee-based activities have increased significantly for the bank. My sense is, the stock could consolidate for some more time, but post monsoon, hopefully, the first half numbers are strong, and I think the market gets a hint that corporate capex and retail demand is going to boost their NIMs as well as their net interest income. I would not be surprised that this stock could get re-rated. For some time, the stock would be in a very narrow range. But if one was to look at the next 12 to 15 months, I think you could expect a decent upside. I think we are looking at a target price of around 230 to 40 here. So I think one can accumulate it slowly. Although it has been a slow mover, I think it has got a strong balance sheet, and the scope for re-rating remains quite attractive.
Right. Moving on, if you see a BPCL, clearly a 49,000 crore capex is what they've approved for ethylene cracker project at Bina refinery. Firstly, that's a good number in terms of capex. And usually the trend that we've seen is that in Engineers India has always been a good beneficiary with regards to where BPCL's capex plans go. What would you advise an investor to do with both BPCL as well as an Engineers India?
So I think my guess is that out of the two, Engineers India looks better positioned because obviously, as you rightly mentioned, Engineers India is a very big beneficiary of the hydrocarbon sector, especially the oil marketing companies. And I think recently the government came out with a clarification that all expansions by government refineries, the first choice of preference for the consultancy work would be awarded to Engineers India. So to that extent, Engineers India is very adequately well positioned to capture this demand. HPCL making a large investment of 49,000 crores is obviously going to prove beneficiary for Engineers India because this order book will actually add to its already burgeoning order book. Engineers India again is a debt-free business, very strong cash flows, and most importantly, if the capex cycle is strong, then one can reasonably expect the next couple of years business to come at a very healthy pace for EI. As far as BPCL is concerned, I think like all the oil marketing companies, they benefited by softer crude prices. And if crude prices remain soft and there is a good buoyancy in the aviation and the automobile market, then one could expect GRMs to improve, and that eventually would lead to better profitability for BPCL also. So I think both of them are hold, but a better choice would be EIL, where I think the risk reward looks better.
Right. So that's with regards to where BPCL as well as Engineers India go. Now, moving from there on, one sector, Avinash, I want to discuss with you is the cap goods sector. Interesting names that have, an interesting of the trend that we've been witnessing. If you have to divide it between the large cap space as well as the small mid cap and the small cap space, let's take into consideration names like an ABB, Siemens. Clearly, with the kind of capex cycle that we've been seeing right now, all these stocks have given a good breakout as well. New highs, almost a fresh, a 5 year high is already that we've already seen on these names. Now, my key question is firstly, taking the current capex into consideration, is there room for fresh rally for a Siemens as well as ABB? And the second leg to it is which are the stocks that could follow suit to match them, because we've not seen that bigger rally coming in terms of the mid cap and the small cap capital good companies.
No, I think ABB and Siemens, I think would continue to enjoy premium valuations. Our sense is that the market is giving a strong premium for these companies because the growth order book in the order book is going to be extremely strong. In fact, our sense is that next 2 years it would be a very strong period for both ABB and Siemens. And I think that is the reason the market is looking at possibly earnings for the next 2 years and not for the current standalone numbers as of FY23. And I think as long as the book continues, the visibility will be there, and that's why probably you may not see any major price correction here. But yes, these companies to some extent are really not valued cheaply. They are fairly expensive stocks, at least in the near term. So a big risk reward may not be possible in the near term. Maybe in the longer term things would improve. But I think from the large cap space, we have been very positive on two large companies, that is L&T and Cummins. Our sense is that Cummins would prove to be a much better bet, considering that in the last couple of years they had underperformed. But I think now with a lot of support from their parent, plus now in the domestic market, the demand for hydrogen as well as combustion engines is going to play a very big role. As far as the smaller companies are concerned, I think there are many small interesting companies like Action Construction Equipment, which has shown remarkably strong numbers, especially in the mobile crane space. They are also into material equipment. They are into agriculture tractors. So I think looking at this company, I would believe the order book is strong and the base is much smaller than larger capital good companies, and where valuations definitely look quite appealing. So I think you could probably look at something like an Action Construction, which I feel could possibly get further re-rated, considering that the order book is strong and the customer segment, especially most of the infrastructure sector names, especially defense, all these are consuming sectors for the company. So I think net, one should look at these names also, because I think the market should also reward such smaller companies, because the order book is strong and the earnings growth trajectory over the next 1 or 2 years is going to be extremely solid.
Right. So I think these are a few of the names that one should be watching out for. And as Avinash is mentioning, that companies like ABB as well as Siemens will continue to demand that kind of valuation, and the growth story could continue. Thank you, Avinash, so much for joining us on the show and giving us those views with regards to the stocks that we've spoken about. But clearly, if you see in terms of markets, there is some bit of pressure that is being built in. There is some bit of profit booking that we are seeing in terms of Nifty 50. We are below that 18,250 level, almost near the day's lowest levels. However, and if you see the advanced decline ratio as well, pretty much in favor of the bears. Let's quickly see Bank Nifty as well. Bank Nifty, almost a 0.2% kind of a cut is what we are seeing, and 43,830 is the kind of level that we are tracking in terms of Bank Nifty. And the breadth in terms of Bank Nifty is also in favor of the bears. Overall, if you see in terms of stock specific action, you have Hero Motor, which is the top gainer today, followed by an IndusInd Bank, UPL, BPCL, as well as Britannia. Whereas there is pressure building in terms of IT majors. So HCL Tech is under pressure, Infosys is under pressure. From the banking space, you have a Kotak Mahindra Bank, and from the consumer space, you have Tata Consumers as well as Titan. Both these counters are trading under pressure. Very quickly, let's quickly look at, in terms of broader names as well. If you see in terms of the Sensex, almost a 200 points cut coming in there in terms of the Sensex. Whereas in terms of stocks, you have Exide Industries, which is seeing gains of 5.5%, Mirza International, Tanla, a few of the other names. Whereas on the losing end, you have a LIC Housing Finance, which is under pressure on the back of the earnings. Oberoi Realty is down in trade. VMart is trading under pressure, as well as a PVR Inox as well, which is down almost around 4.5%. So yes, stock specific action is what we're seeing. There is profit booking that is coming in terms of the markets, where from here on is going to be an interesting bet that we will be watching out for. That's all that we have on this session. Thanks for watching.